welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Morningstar's Director of ETF Research, Jackie Choy. Hi Jackie.
Hi Emma.
So it's certainly been a turbulent month for global markets over the summer. What has happened?
Well, I think if I were to summarize it, I would summarize it with one word: currency. So I think you've seen the market, Argentina all over the news, Turkey over the news, and you saw Argentina put up their rates at 60%, which is pretty high. And also in Asia, you've seen like Indonesia rupiah, the Indian rupees, all hitting record lows against the greenback. So we do see quite a bit of turbulence in terms of like in currency field.
And how have ETF investors been reacting to this news? Because typically, negative news means outflows for funds, doesn't it?
Well, quite usually, but not always. But in terms of like the EM market, I would say, year to date, you saw performance in the negative 7% sort of territory. In the month of August, around 3% down. In terms of flows, it wasn't outflows. On the contrary, it was inflows, not big amounts, but still inflows. If you look at the top 10 largest asset size ETFs around the world with EM exposure, they in aggregate we saw inflows into these ETFs.
And what can explain that? Could it be due in part to the type of investor that typically trades ETFs?
Potentially, because if you look at active funds, they're bought by retail investors. ETFs, they're bought by institutional investors and retail investors, and mostly institutional investors. So the mindset could be a little bit different in terms of like choosing which asset class or in terms of how they allocate their asset as well.
And what about closer to home as we sit here in Hong Kong? What can we tell in terms of trends for China and the Asia market?
Well, in terms of the China market, is a little bit different in terms of flows, because if you look at the largest A-share ETF in Hong Kong, we mostly had outflows, and the largest one had outflows as well, the iShare A50 ETF. Outflows year to date, but we saw a little bit of inflows in the past 2 months.
And what's down to that? Why are people buying broad basket ETFs for emerging markets, but selling off A shares?
Well, I think like A shares is a little bit different. We not just from the fundamental perspective, we also have some market dynamics happening as well. So I think you know that as well. MSCI just included A shares into their EM index in May for the first stage, and August in the second stage. So that's a little bit of different market dynamics happening within A shares.
And does that mean that A shares make up a more sizable proportion of the EM market? Could people be selling off A shares niche exposures because they now have it through their emerging markets ETF?
Well, I wouldn't say there will be a sell-off to buy into the A shares, because after all, A share, although the number of stocks included in the A share, 236, is quite a big number, but in terms of size, it's still very small, accounting for only 0.75% of the EM index.
Jackie, thank you very much.
Thank you, Emma.
This is Emma Wall for Morningstar. Thank you for watching.